We're going to get started so we can get done by 12:30 or people have other engagements going on here shortly. Welcome to Cryptocurrency Part 2 of a two-part series, and this is going to be more from our perspective of the accounting side of it. How's it going to impact us? How's it impact booking, recording, the taxability side of it? I've got a few points maybe from an audit standpoint towards the end of it. We're going to hit on some of the other type things as we go through. And again, kind of like last week, Matt and I are just going to kind of bounce around a little bit here and there. Hopefully we won't get off on our geek tantrum again. But if we do, well, sorry. If we have time at the end, we'll go through these questions. So let's keep rolling. So inquiring minds wants to know, if I get cryptocurrency, A, is it taxable? Well, the short answer is maybe. Depends on the situation. Is the taxability different is it different if I purchase it via actual real or fiat currency, which is US dollars? It could be the Japanese yen, it could be the Canadian dollar, whatever. For our purposes, everything's in US dollars, of course. Or is it different versus exchanging with other cryptocurrency, property, assets, et cetera, et cetera? What if I receive crypto for goods and services? What if I pay with crypto? What if it goes through a hard fork, a soft fork? What if we receive an airdrop? What if I have multiple wallets I want to transition from one to the other? Some of these are things we talked about last week, some of the terminology, that type of thing. What if I'm gifted crypto? Somebody's very nice and gave me 1,000 Bitcoins. I would probably
Retired.
Y'all would never see me again, possibly. However. So, but what if I donate to a charity, or what if I'm a charity and receiving? Because we do 990s around here, correct? So these are things that we're going to kind of walk through today. Part of it. I'm going to go and answer a couple of these right now. The soft fork, as we mentioned last week, that's more of a software upgrade, if you will, as a course. So that's not going to be a taxable event, so we're not going to touch that today. And if I have multiple wallets and I go from one wallet to the other wallet and I own it and I don't change the crypto, I mean, it's just a true movement from bank A to bank B, so to speak. That's not taxable either. So we're not going to even we're not going to touch those. There's nothing to do with anything related to that. Okay. So as we go through our agenda, this can be our agenda. We're going to touch on a couple of terms we talked about last week. Part 1. Again, part 1 saved out there on the S drive for those of you who would like to go review it. Tons of definitions and terminology there.
And on the RNA YouTube.
And on the yes. So we have the link out there from our presentation last week. We do. And that's a YouTube star, didn't you know? So we look at it, how do we record, how do we book it? From our accounting or bookkeeping side, we'll go through some scenarios of, hey, if we get this, then how will we report it? How are we going to look at that? We're going to look at the majority is going to be from a tax perspective because, well, that's what I know. I've got a couple of snippets for an audit perspective as well. And then for those of you who don't know, I think I mentioned it briefly last week. The Senate did pass legislation, the infrastructure bill, and it does have a piece for cryptocurrency built into that. Odds are by the time it hits the president's desk, if it ever does, it won't look anything like what it does now. But in case somebody calls up and says, hey, what about this? I heard about that. That type of thing. At least you'll have some kind of exposure to it. All right. So let's go and dive right on in. Definitions. So this is kind of tiered from the IRS standpoint. And they look at it from the top down of, first of all, we look at digital currency or digital money. It's one of the same right now. It's one of the same as far as the IRS is concerned. And that's simply just a currency that's completely and purely digital. Not physical. There's no hard cash. It's not gold, oil, precious metals, no commodities, nothing like that. Purely digital. Underneath that, you have virtual currency, which is the digital representation of the value that functions as a medium of exchange. Then below that, you have the cryptocurrency, which is a type of virtual currency. Use the cryptography and for secure transactions. I'm not going to read these word for word. I trust we're all adult enough and you already know how to read which is why you actually have full gainfully employed at this point. So, hard fork. Again, this is kind of like the equivalent of a spin-off of a company. Company A spins it off, now you have two completely separate companies, and they function on their own. Okay. Airdrop is a means of distributing additional or new cryptocurrency through the distributed ledger to people who already have cryptocurrency or something else. Okay. Now, let's jump in and look at this through the eyes of the IRS standpoint. Now, one thing to note here is that if you look through any of the notices from the IRS, they don't typically use, and actually they just don't use the term cryptocurrency. So what they do use is virtual currency, and that's kind of what we're going to use today. So that's why I want to point that out today, because that's what you can see the common theme throughout is that we're going to work through virtual currency today. Because again, like I mentioned a while ago, crypto is a subset of virtual. So from our standpoint, what is virtual currency? Well, what do we already know? What did we talk about last week? Well, we know it's the digital representation of a value of functions as a medium of exchange, unit, store value, other than US dollar or a foreign currency. So why is that important? Well, again, crypto is virtual currency. The key here is it functions as a medium of exchange. And we'll get to that here in a little while, but keep that in mind. It's a medium of exchange. IRS, according to the notice 2014-21, says that for federal tax purposes, virtual currency is treated as a property. It's not currency. And because of that, it's not US dollars, it's not foreign. Therefore, there is no, and we'll get to in a minute, I'm getting ahead of myself, but there's not a foreign currency gain loss attached to this. But as a property, you need to know what the basis is in the property itself. It follows the publication 551 basis of assets. It's typically going to be the fair market value of the cryptocurrency at the time you receive it. And again, it does not cause foreign currency gain loss because it's not technically considered a currency for federal tax purposes. Basically, we're going back to the old days of we're bartering. I'm going to trade you a chicken for a cow and a quart of milk or whatever it may be. Okay. Now let's look at it from a bookkeeping standpoint. And kind of the way the approach we're taking on this is we're going to give you a scenario. We're going to show you how it theoretically should be booked. So we know what we're looking for, how we're going to book it, how we're going to receive it, how we're going to dispose of it, and that type of thing. Scenario one, we're just going to buy cryptocurrency via fiat currency US dollars. RMA decide they're going to dive headfirst in the cryptocurrency market. They're going to follow the sage advice of Mr. Matt Bragg as they decide to purchase the sushi crypto worth $1 US dollar at the time of purchase. After a little while, the omniscient wisdom from Mr. Bragg tells them to sell the sushi at its peak, which is $50 per coin at this point. Not a bad profit. So how are we going to book this? Well, we're going to have a two-step part. We're going to record the purchase and we're going to record the sell. Purchase, real simple. Debit asset, credit cash, right?
Right.
Now, we have a $49 per coin cap, or it's not even cap. Discuss that later. Gain. Maybe. So we go to sell for cash. We're going to debit cash, we increase it $50,000. But to get rid of our basis at this point, $1,000, that's what we paid, that's what we spent to buy this, $1,000 at $1, 1,000 coins, $1 coin per coin, $1,000. And now we have a nice big fat daddy gain of $49,000. Okay? Pretty simple, pretty straightforward, nothing we're not used to, correct? Okay. So we're going to use the same, and you'll see this. Why is this? I don't know why this is okay. So using the same scenario, Mr. Bragg still has sage wisdom and is omnisciently wise. This time he says, well, instead of just selling for cash, let's go ahead and exchange that into sushi crypto or polka dot crypto. Why? Because he thinks it can go up. Again, sushi's at $50 per coin. Polka dot is trading for $10 per coin at the time of the exchange. So how are we going to do this? Well, again, initial purchase, we're going to record, and then we're going to report the exchange itself. At the time of purchase, again, we spent $1,000. Very straightforward. And you're going to see a running common theme on that. You probably get tired of looking at it. But if you forget after this training session, you can't blame me. Now, at the time of exchange, Polkadot was worth $10. So if we made $50,000 at $10 a coin, now we have 5,000 Polkadot coin, correct? Correct. Thank you. Now, again, we still have to recognize either a gain or loss at the time of exchange against profit. So again, it's very similar to the time before, it's just replacing the cash for the crypto itself. Pretty straightforward and simple so far, correct? Now, RMA decides we're going to start accepting crypto as payment for our tax fees. This particular one, we're going to take 1,000 coins for our services. At the time, again, this is worth $1. Later down the road, they decide that, well, our guys are getting a little dragging a little bit, so we're going to buy some energy drinks. And they're going to spend $200 on energy drinks for us. And at the time they buy the energy drinks, those just increase to $5 per coin. So we have $1 gain per coin, right? So we have 3 steps in this one. Number one, we're going to record our AR at the time we send the bill. We got to get paid, because if we don't get paid, we don't have to spend. And then they're going to keep us happy. So of course, again, AR revenue, nothing out of the ordinary, $1 each. So how are we going to record? How are we going to keep the employees happy? Well, now we have the happy employee expense of $200. That will go on your income statement as a deduction. We have our basis of $40 because at $5 per coin, that's 40 coins for the $200, correct? Mm-hmm. And then we have a $4 gain per coin. Nothing we're not used to so far, right? Now, a few months later, we still receive that same $1,000. They got some energy drinks. Now they're going to pay for the lawn care services around here, the maintenance, the lawn care maintenance, tree trim, things like that. They're going to pay $600 for this thing. At the time, again, Dogecoin was $5. Same thing, very similar. Got to get paid, right? Lawn care service, crypto $1.20, 120 coins this time because it's $600. Now, because we are paying unless, and again, it's based on IRS guidelines. Are they a corporation? Are they not a corporation? They may or may not be subject to receiving a 1099. In this case, if it's $600 or more, we would need to issue a 1099 if they are not incorporated, correct? Based on IRS guidelines. And that's the main difference here if you're paying for services. All right, as we mentioned earlier, hard fork. It's a deviation to spin off a new blockchain. The blockchain for Doge spins off. You sell 1,000, you sell $1 per, so we have, and now that we have new from the hard fork, there's a new currency, little doggy, little Doge. We did not receive little Doge in this spin-off. So how do we book that? Well, you still record, you still got to record your hours, so I get paid, right? Very simple. But what do we do with this hard fork? Hard fork, we didn't get any currency on this. What do we do with this? Well, absolutely nothing. If we didn't receive anything, there's not a reportable event.
So it's kind of similar, hard fork would be kind of similar to like a stock split. You don't have to record anything on the books.
Depends what you receive. If you receive a stock split, you have to record something.
Yeah. Well, you record a memo in terms of,
You record a memo.
yeah, memo, but in terms of you wouldn't have to record any journal entry.
There's not a taxable event, no. So yeah, there's not necessarily recording.
That's what I meant.
You have to,
Just splitting the basis up between the.
Yeah,
right, you have the basis split, that's it. So you're right, more of a memo type thing, but yeah, if you don't receive anything in the heart, if you don't receive anything, there's not a taxable event. So there's nothing to record at that point. An airdrop. Remember the airdrop, we receive currency because we held currency, cryptocurrency. So we had Dogecoin, we received for services. The R Magnificent is a newly launched cryptocurrency.
not Rhymer coin.
Hey, you know,
Either one of those work.
Rhymer coin or Tom coin.
I did not. I refused. I don't have favorites around here. Now, if you choose favorites to take a side on the partners, that's your business. I am all inclusive. So our magnificence is a newly launched cryptocurrency. All Dogecoin owners are going to receive 0.1 our magnificent coin for every Dogecoin held. Well, we already discussed we held 1,000 Dogecoins at 0.1. That's going to give us 100 our magnificent coins. At the time of the airdrop, the fair market value of each our magnificent coin is 25 cents per coin. So how are we going to do this? Pretty straightforward, pretty simple. First, got to record the AR, and we got to get paid. We don't get paid, we don't have the crypto, we don't get the airdrop. They don't care what our AR says. They don't care that we agree to take it. We don't have it, we don't get it, right? Right. So how do we record the airdrop? Well, pretty straightforward. Airdrop, that is an ordinary income at the time that we have dominion and control. Dominion control means I can trade on it, I can act on it. If it's sitting in my account and I can't act on it, I don't have dominion control, and it's not included in my income yet.
Like.
So, yes, such as receipt.
Constructive receipt. But they like to use the words dominion and control.
Yeah.
Because they like to
Because
control
we
your
want a new
dominion.
term.
Constructed receipt, there you go.
Constructive receipt. It's.
It's kind of like using hard fork instead of spin-off. Yeah, it's them just using new terminology. So yes, if you don't have control, you can't sell it, exchange it, hold it. But at that point in time, when you can, you have other income, ordinary income. Now, at the time you have control is when you have to figure out how much it's worth, because that determines your basis. That determines how much ordinary income you have. Just because it was launched at 25 cents, if it's worth $1 when I can actually have control of it, I report $1 per coin in income. Make sense? Question?
So in realistic terms, the drop does not affect the fair market value of the original coins, right?
Correct.
Okay.
There is no basis reduction in your original position.
Literally like just like free crypto.
Do what?
Isn't that like basically just free currency now?
They
Free
treat
money.
it as found money, yeah.
Less.
It's like finding $20 bill on the sidewalk,
You've got to pay tax.
and you got to pay tax on it.
Except for that.
Yeah.
Those are,
Is it not like someone paid you with Exxon stock? They gave it to me, they handed to me as shares. It was worth $100. By the time it actually got transferred in my account and I could spend it, it's worth $200. Right? I mean, that's
Yes,
the equivalent.
exactly. That's exactly right. So, all right, so let's look at a day in the life of tax. Of course, the IRS is going to say, oh, no, sorry, this is you. Go for it.
I just want to go over some letters. These are the letters that the IRS is sending out about cryptocurrency. There's a couple of them. There's the 6174 and 6174A. These are no action letters, and if you look at them, here's the 6174 and here's the 6174A. It actually took me a while to find the difference, and it's just one thing. On the 6174A, they end the letter more aggressively. And you see it says you do not need to respond to this letter in the second page there at the bottom. And then if you go to the 6174A, It says you do not need to respond to this letter, but also, what was it?
Nope.
However, we may send other correspondence about potential enforcement activity in the future. So this is just a little more aggressive. Neither of them require a response. That's the thing to know about these two. Then there is the 6173. This is the one that they're saying, you need to respond to this and tell us what's going on, or we're gonna look into your going-ons ourselves. So this one is the necessary response letter, the 6173. And then, of course, CP 2000. Y'all probably never seen this one, but you don't need to know anything about it. Just forward it to your accountant. So no, we get these all the time from clients, and it's an automatically generated letter by the IRS system. So if they find something, a discrepancy, it's just automatically going to shoot the client a letter saying, hey, this is what we're showing you're off. So what's going on with that? And you know, sometimes they're right, a lot of times they're wrong, and usually you can just respond to it and solve that.
From governments.
Oh, this is online, yeah, just,
They have a lot of.
yeah, this is,
And how much in fees? So interest alone, 7, that looks.
So you're,
But I think they do like per day.
I would love to owe that much tax.
Yeah.
That'd be- that'd be-
I'm making money, I'm making money.
that'd be fantastic.
Gives you an indication of how much you make.
Right.
So, but if you hold this and it is volatile
Yeah.
and you have a turn of fortune,
Yeah, be bad news.
you know, yeah, you could owe that much money and not have it because the fair market value has gone into
Very good
crapper.
point, yeah.
and you probably have to sell your crypto to pay this anyway.
Yeah,
Now, one thing to note on these two is, so basically the first 3 letters are, hey, we're trying to be nice and give you a way of owning up, fess up now,
Mhm.
because we know you've got it.
We know you've got it, trans up.
This year, Anderson, you get this letter right here, you don't get the nice guy anymore, which they're not nice people. You don't get the nice guy anymore. The other 2 letters like, hey, maybe you should think about amending your return, double check it, amend it. And,
Just in case
and,
you forgot.
yeah, own up to, your discrepancies over here and before we do it for you.
right, put a lien in your house.
It's the amount of diarrhea you have.
Yeah.
You get the one letter, you get a little queasy. The other one says, however, you got gurgling. You get the one that says time to fess up, it's like bad news. And this is like,
This is your X-Lax. one.
change of pants.
The land we just bought, we're gonna take it.
All right, so how are we gonna look at this from a tax standpoint? When is it taxable and it's not taxable? How do we calculate basis, holding periods, things like that? I do have this saved out there. I'll PDF it, so we have this for people who want to use it. Right now it's just an Excel spreadsheet. I've got kind of drafted up a little bit. But our taxability depends on how we receive it. How do we acquire the cryptocurrency? If we buy it, it's not taxable at the time we buy it. If we exchange it, it's not taxable at the time we exchange it. It's really only taxable in the case if we receive it via airdrop and we have dominion and control, or if we receive it as payments for goods and services. In both cases, they're ordinary income. If I receive it as a gift, somebody gave me that 100 Bitcoin that I'm about to retire from, then again, it's not taxable till I act on it down the road. So you have ordinary income, or it's not taxable at the time you receive it.
But there's a gift tax return.
Not on my side.
Not on your
receipt.
side. On the owner's side. Yeah.
We'll get there. Damn, you're impatient today. All right, so our basis, what is our basis in this thing? Like I said earlier, typically speaking, it's gonna be the fair market value of cryptocurrency at the time we receive it, right? But like your stocks, your property sales, like if I buy a painting, a new car, I have other fees that are built into that. That also goes towards your basis, increases your basis at that point. So that would be our adjusted basis. Fair market value, expenses, fees. Typically speaking, for you, when you include your ordinary income, the amount you include in your ordinary income is your basis at that point in time. If I receive it as a gift, it depends on when I sell it as to whether or not what my basis is going to be. If I sell it for a gain, then it is the donor's basis plus the gift tax that they might have paid. If I sell it for a loss, then it's the lesser of the donor's basis or the fair market value of when I received it.
There's a reason why, when this kind of stuff happens, you really do want to file a gift tax return. Because otherwise, most people, oh, grandpa gives the kid, 10 coins for $1, and then it's like Bitcoin and it's $44,000. And the kid goes to sell them and he doesn't know what date the thing was purchased on. So if you don't have that proof, you've got $44,000 of gain on day one. I mean, he may have given it on the date of the sale. And it's a big deal when you die.
Oh, yeah.
Because the IRS is looking for valuation discounts and valuation issues, and if you don't have it, they win, period.
And the third little point there is if you cannot support the donor's basis, doesn't matter what the fair market value was when you got it, doesn't matter what they tell you it was, your basis is zero.
What's the best way to track that or have the best form of evidence?
You have to have some kind of documentation,
Just
either
like whenever you purchased it or something.
something when they purchased it or a gift tax return,
Okay.
something like that, something showing when they bought it, what the basis was, that type of thing. If you don't have some sort of documentation, you can't support it, then you have a zero basis and it's all gonna be gained to you.
So claim without proof can be dismissed without proof.
So if somebody has claimed it on a gift tax return, they've basically stated the value, like in an inventory, in a probate issue. And when you have that value, then it's up to the IRS to fight that number because it's being subjected to tax. That's why if you don't have a valuation, you lose. If you have a valuation, you're arguing between the value you've claimed and the value they think. And a lot of times they won't even screw with it at that point unless the amount is huge. But if you don't have it, you're toast. And going and getting it after the fact type documentation is a very sad second.
Yeah.
Because then the proof is on you. And the government typically doesn't, they lose a lot less of those battles.
Yeah.
They don't fight most of the battles where there is some
Contemporaneous record or something like that.
Yeah.
Something shows.
You shifted the burden to them.
Yep.
And then
Which
I'll
is
just-
always what you want to do. Shift it to them.
I feel like I'm in a business law class, all these.
There you go.
Now, when does our holding period start?
Yeah.
Now, this is not necessarily important at this point in junction, but you need to know that, you'll know, it'll become a little more clear on the next slide, but your holding period in every situation, with the exception of the gift, begins the day after you receive crypto. Doesn't matter how you receive it, but the day after is when your holding period begins. Now, if you receive it as a gift, if you have the documentation, their basis carries over. If you don't, it's the day after you receive it. And of course, if you don't have that documentation, odds are you're gonna have a zero basis anyway, so, enjoy.
Holding period.
Right.
Yeah.
Holding period carries over, as long as you can support it.
Yeah.
Now, what happens when we dispose of this? We know how we acquire it, we know we're gonna tax it, it's only gonna be ordinary income from receiving airdrop, or if we take as goods and services. Now, what happens, how do we get rid of this? Well, a disposition, we can either sell it for cash, fiat currency, whether it's US dollars or foreign currency, whatever it may be. We can exchange it for other property or currency, virtual currency, or we can use it to pay for goods and services. Now, the taxability when you dispose of it, depends on your status. Do you use this for trade or business? Meaning, am I in the business of buying and selling Bitcoin, currency, property. It
Like a trader
Like
or a
trader,
dealer,
Yeah,
that type of thing?
yeah, an ordinary course of your
could be,
business.
yes, absolutely. Is it in your ordinary course of business, do you trade things like Bitcoin, stocks, bonds, that type thing? Are you a trader type thing of different levels? So in our examples, RMA, when they sold it, when they bought their energy drinks, so they paid for the lawn services, things like that, it would not be ordinary gain loss, it would be a capital because it's not our trader business, right? Holding period. If it's a trader business, doesn't matter, it's all gonna be part of your ordinary income anyway. But if it's not that, if it's a capital asset, it's gonna follow the typical long-term, short-term. Under 365, short-term, greater than or equal to 365, long-term. Right? Adjusted basis time you sell is gonna be your adjusted basis at your acquisition, plus any expenses at the time of the sale. Calculation gain loss, of course, just standard gain loss at that point in time. Make sense? If you receive property, of course, fair market value of the property received minus your adjusted basis. And if it's fair market value goods, it's just based on the fair market value less the virtual currency. Again, kind of as we showed earlier in the examples. But you do have those fees, any kind of fees or expenses that you have in selling this or disposing this, will get added to that basis. Someone buying a house or selling a house, car, a painting, this chair, desk, whatever it may be. Now, what's not on these two slides, gift tax, charitable contributions, sorry, not gift tax, charitable contributions. There's so many nuances on this thing that it's very difficult. It's very difficult to put together a grid like I had on the other two slides. Pretty much it's going to be just like the non-tax charitable contributions, whether you receive it or give it. So this publication 526, 1771, and then Form 8283 is the non-cash charitable contribution form. That will have to be filed on both sides, depending on when they sell it. So the status depends on whether you're donor or donee at that point.
Is it the same thing like whenever you're giving stock where you have to have the average price for that day? Because I know like things can spike on days or crash on days.
Yes.
Okay.
So that's what I say. I would definitely double check that publication for that, because again, it's just property, it's non-cash type deal. Depends on when they get dispose of it as to if it's under 3 years, over 3 years. Your basis on, so there's a lot of different moving pieces to that. So rather than spend 45 minutes, we don't deal with a lot of those. I don't know that we're gonna see a lot of these anytime soon, hopefully not. But if we do, we'll cross that bridge when we get there. By all means, if you do have some, come find me. But because you could be the receiving foundation, or you could be the one donating to it, it's very different as to your taxability base and all that, so. Okay.
Just want to go over some real world examples and some statements that we might come across that clients might send us. I've got my friend Joe Dirt to let me use his accounts here. This is Coinbase. We talked about this last time. It's the most used in the US, I believe. Here you can see, you can generate reports here. And if you go to the top right, the profile, and you open it up, you see taxes and reports right there. If we click on Joe's taxes and reports, it'll open up this download report, and you can choose the CSV or PDF report, click generate, and then you can download it. What do those reports look like? So this is from Coinbase. This is the CSV report, Excel report. This is one thing we could get from Coinbase. And if you want it in PDF format, it's going to come out looking like this. This is just something to see that we may be actually receiving from clients. So just want to give you all a look at it. This is what Robinhood is sending out. If you trade crypto on the Robinhood application, they're going to send a 1099B, and hopefully they're all going to start doing this. And Chad's going to talk about pending legislation later on, but so, legislation is good to get this stuff in a readable format to us so that we can help our clients and so that they can know what's going on. So hopefully this will be more common as we go along here. Last time we talked about DEX as decentralized exchanges, and we used the Coinbase app and the Coinbase wallet in that example. Well, MetaMask is the most used wallet for these types of transactions. If you go to MetaMask and you are looking at your wallet, you can print a report and it comes out looking like this. 532 pages.
Programming.
Yes, 532 pages of that. So how helpful is that to us? I mean,
Can I buy Val?
yeah. What's your chargeable hours on something like that? So the reason I want to show this is because realistically, right now, there are a bunch of tax applications. I'm not endorsing any of these in particular, but CryptoTrader.tax is one, TaxBit is one. There's dozens of them, and Legible is the one we'll park on. So you can go to these tax applications online and you can link all of your accounts to them, and it will spit out what we need to make that readable and so that we can do something with it. They're variable prices. Usually, most of these depend on the number of transactions. So we have price examples on this one. The reason I want to park on Legible is because Chad found this one. It actually partners with Thomson Reuters, SurePrep, and QuickBooks Online. So that covers a lot of our client base and what we do. So it could be something that if we do a lot of these, we could look into, might be useful. Here's their Thomson Reuters Legible automation flow chart that we got off their PowerPoint. The firm sends out the organizer, the taxpayer completes it, and they enter their crypto data onto Legible, which gets the data to us to review, and we can generate reports and import that directly to UltraTax. So
would it generate something similar with like a 1099B, or would you generate reports that we can use to fill in the Schedule D or whatever?
it is going to generate the 8949.
Okay. So yeah.
Directly. Yeah, I believe that's what most of them spit out, directly to 8949. So we can just go,
Right.
copy that straight into
There
the
you go.
return or attach
There
it
you
or
go.
whatever.
Yeah.
Yeah, we all
Yeah, we
looked at that. Yeah.
discussed on
Well,
detail.
that was Coinbase though, I believe, right?
Most of their transactions were, yeah. And so here's was this Legible's pricing. It's $49 for up to 200 transactions, and then between 200 and 1,000 adds another $50, and then each set of 2,500 transactions over that is going to be another $100 on top of that. So, and this is comparable to those other two and most of them out there. I haven't seen any huge discounted prices or way more expensive. This is a good range for all of them that I've seen so far. So another practical standpoint, the 8949 Schedule D, this is what we're going to be actually putting these crypto transactions on the tax return. So y'all have probably seen this. We've got page 1 is short term, page 2 is long term, and then you're going to check the box for if basis is reported or not. And if there's a difference, you'll do a different sheet for each set of transactions. And if you have more transactions that fit on a sheet, you'll do multiple sheets for that type of transaction. And here's just a sample. So this is I've chopped it up to just be 2 things here, but to report this transaction, if you buy 1 Bitcoin on Coinbase for $100 on 8/29, buying it with fiat is not a taxable event. If you then send that Bitcoin from Coinbase to Binance the next day, that is also not a taxable event. It's not a taxable event to send crypto from wallet to wallet. Now, if you trade 1 Bitcoin, you get tired of it, and you trade all of that 1 Bitcoin for 5 Ethereum on 9/16, that is a taxable event. And we're going to say that the price of Bitcoin has dropped. I know that never happens, but the price of Bitcoin has dropped from $100 to $90. Okay, so that's going to be this first transaction. I guess y'all can't see my mouse there, but that 1 Bitcoin on your date acquired 8/29, date sold 9/16. Your proceeds are $90 and your basis is the 100, so you have a $10 loss there. And then let's say that you send that new 5 Ethereum back to Coinbase on 9/21 and you sell it. And now the price of Ethereum has gone up to $200. So now your 5 Ethereum is there, and you do the same thing with your date acquired, date sold, proceeds, and basis, which gives you a $110 gain. Then you total them up. and you've got your totals there at the bottom, the 290, the 190, and your total gain is $100. That's gonna get sent to Schedule D, where you fill this in the same way into the corresponding boxes. Part 1, short-term, Part 2, long-term. You would fill this out and it would eventually come to the 1040. So the question we want to look at, the cryptocurrency question, is moved to the front page in 2020. It's right up front. It's like, what's your name? Did you use crypto? So, and the reason we want to talk about this is because it has changed the way they wrote the question. At any time during 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? That is so broad.
Yeah.
And that is not, they came out with the fact and said, if you just bought it with fiat currency, you do not have to check yes to this box. And that's not how it reads. They didn't change the question, but that's what they came out and said. If you just purchased it with fiat and you didn't do any other transactions, you do not have to check yes on that box. In 2021, there is a draft of the 1040 going around. It's not finalized, so who knows? We'll see. But they basically reworded it, and it's still not crystal, but it's less muddy. So far, the current version says, at any time during 2021, did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currency? So a little less vague, and it looks like they're leaning towards sticking to the just purchasing is not taxable. So, or not, you don't have to check yes on this box. Right.
They got rid of the acquisition piece altogether.
Also, I still laugh at whenever Mary Claire was like, so what do you do if you check yes there? And I'm like, that's a great.
Yeah, so you don't do-
Let me get back to
I know, I was trying to think, I was gonna say something.
you. You did.
Oh,
No. All right, I'm gonna scroll back, just, let's see, there's something I was gonna mention.
I wanted to ask a question, I wanted to ask questions about the 8949 example where they checked the box saying it was a covered transaction. When you send if I had crypto and I was a client of RMA and I sent my transactions through to the legible site or a similar service, it would probably generate reports and it would state that the transactions were covered.
yes, if they were, right. It should pull all that when you link your accounts.
So one thing I want to kind of note on this is, I was going to talk about here. So currently, there are two options that some companies have been sending these out with. And I know some of us, we talked about it, I think one of our tax meetings a long time ago. I think it was Coinbase that was using 1099Ks instead of 1099Bs. And that depends on the number of transactions, what they've been doing. Because the information reported on 1099K is so confusing, it doesn't provide a basis. It doesn't give you kind of any indication of it's in the IRS on that information. So they pretty much have gone away from that. So I think going forward, anything we see should ideally be 1099Bs, but we'll find out. But yes, you might see some 1099Ks, you might see 1099B, you may not see anything. And it's all depends on the number of transactions that they produce with that particular exchange. And they have to be a US exchange.
Credit card companies use.
I was just
Exactly,
Yeah.
that's the thing.
Yeah, it's in everything.
That's what was, that's what
Those
was.
receipts, yeah.
Yeah, so it's.
So that would just be the proceeds on the.
Yeah.
Yeah, they're just showing it by month.
Yeah.
What
Right.
type of proceed.
Right, and then show what the basis is and give you any information, any detail. So a lot of confusion on that, and the IRS thinks you have a lot more money than you did. So there's where a lot of confusion comes in.
And real quick, Danny, going back to your question, so any information that's not provided, it will have a way to fill it in yourself. I don't know if it's gonna patch every single hole automatically, but there's a way to handle each individual situation, you know what I mean, on a case by case, so.
So. And there's still a lot that we don't know, because the IRS are not included.
Because they don't know.
We don't have-
Yeah, if you want to look at an actual return that has those actual reports in it,
Yeah,
it was not an inundating number of transactions. They may have had 20 or 30, right? Or he did.
Yeah, well, less than.
Less than 50?
100.
Yeah,
Probably.
Yeah.
there were we had two different reports with the information on it and it'll make your head
I
spin.
think I remember. y'all
But he
talking-
used a service on that, so we
Yeah,
had,
you did.
well, you said, he used.
You didn't
service-
use the RMA approved service.
Which one was
We
that?
have two.
I'm pretty sure that Matt and Chad's show was the art. All right, audit. So what can we look for from an audit standpoint for looking at this? Well, you've seen some of the reports already. You've seen how we're gonna look at booking this thing. So just a few things that I was kind of we were kicking around and discussing and, if I were to become an expert auditor, which I am not, what would I look for? How would I look at this? As we already know, it took an accountant to catch Al Capone. Why? Because that's what happened. Basically, you got quote unquote audited, if you will. And you got caught for tax evasion. Now, if I'm gonna go look at this for an audit standpoint, I'm gonna go look at my financials. I'm gonna look for anything that can be currency, new assets, crypto related, NFTs, everything. I mean, anything I see that looks like it might be funny or looks like it could be virtual currency related, I'm gonna look at that a little bit closer. I'm looking at are they listed out there that way? Do I have any kind of AR, do I have any kind of AR or AP that are being quote unquote paid or closed out that I don't have a corresponding cash transaction, credit card payment, or something else that would, a normal way of closing those out, if you will. And then, of course, we look at that. Again, same thing with invoices that are paid. There's not really a paper trail, it just doesn't look right. If there is something that looks like that, or you do find that, then I would say, go back and look at the accounting. How do we book these things? What are you treating for tax? Are they ordinary income? Are they taxable? What's the holding period? Are they classifying correctly as long-term, short-term, ordinary gain, capital gain, that type of thing? And kind of go from there. Because again, like I said, this is all going to change. This is property. It's not a currency. It's not cash.
May do a part 3 next year.
Yep. Now, legislation, HR 3684, if I can talk today, was passed this Senate. It has a lot of very vague language in it. It's going through the House and it's going to look very different, hopefully, when it comes out of the House, more than likely. Some of the highlights they had in there, and that's the infrastructure bill going through. These are specifically related to crypto. Don't know what it's gonna look like again, but just kind of give you a heads up. Again, if you get a phone call, you email it, hey, I heard about this, going through what I need to know type thing. This is all we know. First thing they do is, instead of using digital money or digital currency, they're calling them digital assets. If you recall from last week's part 1, we talked about virtual currency, NFTs, potential virtual currency, whatever, internet. All that will fall under a digital asset, basically, by this definition. The other thing that they're very broad, the thing that's ruffling the most feathers right now is the brokers for these virtual currencies. The way they're defining is just this: anybody responsible for servicing, transferring a digital asset on behalf of another person. So you recall, which you probably don't, but a miner or a proof of stock, proof of stake, people going out and finding these and transferring over, they don't know who you are. Based on this definition, they're going to be qualified as a broker, or could be, should the IRS decide to enforce it. And that becomes a problem when you look at the reporting requirements. Those brokers are going to be technically responsible for telling the IRS where they sent you. Again, these miners are not going to have my name, they're not going to have my information, not going to have my social, I hope. So how are they supposed to report this to the IRS? They're saying this is going to send a lot of things offshore because it's going to be so daunting on the reporting requirements.
If it gets passed the way it's.
If it gets passed. Currently. And again, from a reporting standpoint, they're anything, and they already do this for cash, right? For the bank, for $10,000 at any point in time in transaction, they're already required to report it through FinCEN. They're just going to expand that. They're going to expand that to crypto now.
Sure.
Now, if this thing goes into effect, right now it's listed as effective date for any returns filed after December 31st, 2023. There's a lot of time for this thing to change face. So odds are, it's not gonna look completely like this when it passes through the House, not gonna look like this when it's the president's desk. Don't know what it will look like, but it won't be this.
Might as well be sitting on the floor.
Yeah, you just get used to it, like, you sit, yeah, I sit in it and just, so.
So, you know, the third point there, the reason for the reporting to the IRS on cash transactions is they're looking for, money laundering.
Yeah.
So, you know, all of a sudden they're using this, they're pushing that into the crypto environment.
Well, you know, that $69 million people
Yeah.
is not digital currency, so.
They're gonna change our CE requirements because we have to take out any money laundering, of course, every couple of years at the least.
So I gotta put crypto on the CPA exam next year.
Hey, you know what? Not my problem. So that's pretty much all we have. Are there any questions we can address here coming up?
So this is talking about the future. However, what are they planning on doing anything for going back in the past, looking 3 to 5 years past? Because you know, this is.
Look at that.
They're like, we're not even worrying about.
Yeah, they, I mean.
Not, well, again, we don't know what the final bill is gonna look like. This is all that pretty much
Mhm.
is covered in there currently. The one that came out of the Senate and went to the House. So no, right now they're just trying to figure out how to, I think they're still trying to understand what is in Congress anyway.
You can still breathe easy.
Yeah, you got a couple of years.
And
And the thing that says it's not going to affect till December
Yeah,
20th.
I mean, it's prospective, it's
I'm
not
sorry, go ahead.
retroactive.
well, and this is a good thing for what it should be. I mean, with Coinbase and things like that, they should be sending out these statements. So that's not a big deal.
Mhm.
The issue people are worried about is, like Chad said, minors don't even have the ability to send that out. So what does that do to them? That's what's up in the air.
Mhm.
So, I mean, overall, it's a good idea, and hopefully they'll just clarify.
Mhm.
Yeah, they tried to before it left the Senate, but they couldn't get it passed in time. So that's pretty much all we have for today. Do we have any other questions?
I'm
we
gonna
can-
become a crypto broker in the Cayman Islands within 3 years.
No doubt.
Very insightful.
All right, if there's no other questions, then if y'all could just, that